You're wrong, you little Jimmy, you're definitely wrong. Well, holy smokes everyone, in today's video we're going to be going over how everybody, maybe even including myself, could be wrong about what's about to happen in the market. And today was another absolute wild day in the markets today. We got some new news, we got some new data that things are getting worse. And the markets are now finally starting to wake up to reality that the Federal Reserve is not going to pivot soon, that company earnings are going to get much worse, that stocks are still overvalued, and this bear market rally that we've been seeing over the past month is now over. So what is this new news? What is this new data that we got that scared the market so much today? Well, that's exactly what we're going to go over in today's video, so you know the drill. Let's not waste any time. Let's get straight into the news, the facts, and the data. Well, look at this everyone. Another day, another big company announcing huge layoffs. So Yahoo is going to lay off 20% of its staff by the year end beginning this week. This is absolutely crazy, people. And this is a story I've been covering because of what's been happening right now. They've been saying the labor market's so strong, there's so many jobs. But what I've been trying to tell people is a lot of the good high paying jobs, they're going, and the only jobs that are being created are low paid hospitality and leisure jobs. And another reason why there's so many jobs being created is because people are forced now to work another part-time job or another full-time job to keep up with the cost of living. So listen to this. Yahoo will lay off more than 20% of its staff, or around 1,600 workers, with a company of Yahoo for business unit being slashed in half. The company said about 1,000 of those cuts would occur by the end of the week. Now, another reason why a lot of companies are doing this is because their revenue is falling, and if they don't announce cuts, their stock is going to absolutely crash, like a stock that I'll show you in a moment, which has got absolutely decimated. So what they're doing is they're appeasing shareholders by saying, well, look, don't worry, we're going to cut a lot of jobs, and shareholders love this. And a lot of people saying, well, layoffs, that's great for stocks. Well, yes, it's great in the short term. What happens if everybody gets laid off? There'll be nobody to spend money at these companies, and these companies' revenue will collapse. So yes, it's good for the individual company in the short term, but if all companies are doing layoffs and consumers don't have any money to spend and we fall into recession, then everyone gets very fearful and tightens their belts, it is not going to be good in the long term. Because look at this, everyone. Ouch. Lyft shares tanked 20% after company issues weak guidance. So this is another thing that's happening in the stock market, and a big shift I think is going to happen. I've been telling people that companies' earnings are going to fall. They're going to start issuing weak guidance. But what a lot of companies are doing right now to try to hide how bad things are going to get, they're not giving guidance at all. But the companies are giving guidance. They're giving very, very weak guidance. And that's telling us that things are going to get worse before they get better. But wait, breaking update, it's now down 30% after hours. That's right. Lyft shares is down 30% after hours. This is absolutely crazy. So Lyft said it expects to make roughly $975 million in revenue in the fiscal first quarter of 2023, lower than the $1.09 billion analysts anticipated, according to Street Account. The rideshare company recorded 20.3 million active rides in the third quarter, effectively flat over the year, but up 8.7% over the year. That's still down compared to the 22 million rides they had during the pandemic. So more layoffs are coming, companies' earnings are going to fall, but this is not new. This is what I've been trying to warn people about. But what's now starting to happen, the narrative in the markets, which is what I've been trying to, beat on my chest, beat on the drum, and tell people, warn people about, the Federal Reserve is wrong. All these market analysts are saying the Federal Reserve is going to pivot next meeting. They're going to start cutting in the second half of the year. They're all wrong. And what if even I'm wrong and inflation goes much higher than we all thought, or stays sticky for longer, and the Federal Reserve has to go to 6-7%? What do you think is going to happen to the markets then? Well, that's now what a lot of fame investors are starting to ask these questions. Look at these reports, everyone. So everyone's favorite CEO, Jamie Dimon, warns it's too early to declare victory against inflation. And yes, well, I'm sure a lot of you think he's just trying to manipulate the market. Yes, I take everything he says with a grain of salt, but I think he's actually right, and he's actually being quite sensible here. He's saying, the Federal Reserve is being very dangerous with what they're saying. They're being very complacent by saying we're now having disinflation. People, I think this is not further from the truth. And yes, while we've had a few CPI reports that have come in flat, we had this happen in 2021 and 2022, only for inflation to surge higher again. And I think that's about to happen, especially what's going to happen with China reopening. That's going to create a lot more demand, and it's going to mean inflation is going to be sticky for longer. Not only that, but deglobalization. We've been able to offshore all our production, offshore all our manufacturing to keep the cost of things down relatively low, even though they have been going up much higher than CPI. but deglobalization is also going to make inflation much sticky for longer. Because look at this, Fed Governor Crystal Waller warns that interest rates could go higher than expectations. So what we've been seeing, everyone, is we've been seeing loosening of financial conditions. Since the Federal Reserve came out and said we're starting the first phase of disinflation, a lot of the markets surged higher. Bond prices fell, and this was loosening financial conditions. This is the opposite of what the Federal Reserve wants and what the Federal Reserve needs. So now all these other Fed officials are having to come out and say, no, actually, we're wrong. Actually, interest rates have to go higher for longer. Because like I was warning about, Al Iran warns about disinflation's dangerous complacency. Because remember, the Federal Reserve was very complacent when they were saying, don't worry, inflation's transitory, there's nothing to worry about. Well, they're wrong about that. Then they said, don't worry, we think inflation's peaked. Well, they're wrong about that again. And now they're saying we're having the start of disinflation. Well, yes, maybe inflation will go down lower from its peak. We're still going to have above trend inflation for much longer than the market is realizing. But also another huge story I want to quickly mention what's happening in the financial markets is a huge announcement today by the SEC about what's going to happen with the Kraken exchange. So crypto tumbles after Kraken agrees to shutter crypto staking ops to settle SEC charges. As CoinDesk reported earlier, the Securities and Exchange Commission confirmed that it has indeed reached a settlement with Kraken under which the exchange will pay $30 million to settle allegations it broke security rules and would end its crypto staking program as it involved unregulated securities. It is unclear if Ethereum is among the alleged securities. So this is absolutely huge for the cryptocurrency sector because Coinbase, that's was something they definitely wanted to do. They wanted to do staking. This was a huge revenue source for a lot of these cryptocurrency companies. And I'll get into a moment after this announcement was made by the SEC, Coinbase shares absolutely tanked. Look at this, everyone, down 14% today. And we can see here Bitcoin reacted negatively to this news as well, down about 5% to $21,800 a coin. So what this is showing us, the cryptocurrency industry still faces a lot of uncertainty with what's going to happen with regulation. Do I think it will be completely banned? No, there's too much money in it right now. There's too many investors that have money in it, pension funds that have money in it. It's not going to be banned, but there could be more unflattering or unfavorable regulations by the Security Exchange Commission, like banning staking. Because we all know the SEC doesn't want cryptocurrency to compete with the banking sector. So again, I'm not fully convinced that we've seen a bottom in Bitcoin just yet, and a price range I'm looking to get back into is anywhere between 15,000 and 18,000. Yes, it may fall lower to 11,000, but I'm not trying to time the exact bottom because nobody can. I'm just trying to get in a good range, and that's definitely a lot better than what people are paying around 60,000. Now, again, going back to the statement, maybe we're all wrong about what's going to happen with interest rates, and maybe it's going to go much higher than we all thought. Look at this, Bloomberg put out a report. We're probably all wrong about interest rates. The widely accepted idea that rates will eventually fall back to pre-pandemic levels is based on economic theories that may turn out to be backward. So that's exactly right, everyone. We've had falling interest rates for the past 30 years, so people think this trend is just going to continue. Well, that could be very, very wrong indeed. Yes, while they're saying, well, we have an aging population, so inflation's going to be low, we're going to need to keep interest rates low. Well, on the other hand, we also have advancing technology that's going to increase productivity massively, and also we're going to have a lot of these retirees forced to stay in the labor market because the cost of living is going to be so high and they're not going to be able to survive on Social Security. And while we've had a 30-year period of low inflation, it hasn't happened like this throughout history. We've had periods of, like what we've had 30 years of low inflation or low CPI data. We've also had periods like in the 60s, 70s, and 80s of high inflation. And we could be about to head into another multi-decade period of higher and prolonged inflation. So everyone, I know what you're thinking, woke, hey, what does all this data, what does all this economic jargon mean for you in simple terms? Well, what this means is, everyone, more layoffs are going to be coming, and it's going to have a domino effect because one person's spending is another person's income. This is going to affect the leisure and hospitality industry. This is going to affect companies' earnings. That means their stocks are going to have to be repriced. We still haven't even felt the full pain, the full effect of the Federal Reserve interest rate hikes because this has been the fastest rate hike cycle in history. And this time we've gone from zero, not from 5% to 20% because that's going up 4 times. But imagine asset prices priced at zero and then going to 6% interest rates. When you think about it in percentage wise, it's actually much, much higher. And if you look at today's debt levels compared to the 70s, the US government debt is 125% of GDP now compared to around 30 or 35% in the 70s. So us going from 0 to 5% is going to have much more pain on the markets than back what happened in the 70s of going, for example, 5% to 15%. So everyone, I urge you, be patient. The market may rise tomorrow. It may rise for another week, but the markets are just trade on algorithms. They can just move for whatever reason the algorithms choose. There's a saying, the market can remain irrational longer than you can remain solvent. That's why I don't short the market. I just simply wait on the sidelines. Dollar cost average into assets I think may do well, like gold and silver, and I wait patiently for good buying opportunities. But everyone, what do you think will happen? Let me know down below. For all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.